Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And a good morning, listeners. Welcome back to Tax Insight here on WOMT, the Lakeshore's good neighbor. We got Jeff from Hawkins Ash with us this morning. Jeff, good morning, sir.
Good morning, Terry.
We're talking about HSAs, also known as a health savings account.
You're right. Because, there is certain things that people can do between now and tax day to be able to still save taxes on last year's return. And just like you said, Terry, it has to do with health savings accounts or HSAs. Now, with the tax law change that happened a couple of years ago, most taxpayers now just take the standard deduction. And because they do that, this limits the amount of deductions that are available for medical costs. That's why I like the HSA, since you can take a deduction for medical costs, even if you take the standard deduction.
So let me ask you right away, is this something that anyone and everyone can set up?
Unfortunately, no. So you have to be covered under a high deductible health insurance plan. And the nice thing is, I guess in the HSA case, is that many employers are now offering these type of high deductible options.
Gotcha. So if someone is eligible, how does the tax savings actually work if it's not like an itemized deduction then?
So you can get a tax deduction for up to $7,300 for a family plan or $3,650 for a self-only plan just by contributing that amount into your account. And people age 55 or older can contribute even more. And the nice thing is you don't even need to spend that money to get the deduction. All you have to do is put those funds into your account. It's that easy.
All right, so let's say someone has a cafeteria plan at work. This is how someone can contribute to mine, correct?
Right. So, this is my favorite part, because the way that this works is that by contributing through your employer's cafeteria plan, you're not only going to save income taxes, but you're going to save Social Security and Medicare taxes as well. And you can also put this money directly into your account. But if you don't run it through your employer's HSA and you just put it directly into your account, then you only get a tax deduction for that. Actually, you can do both as long as you don't go over those limits that I talked about earlier.
So do I need to use the funds before the end of the year?
No. So unlike a FSA or a flexible spending account, this is not a use it or lose it plan.
Okay. So it's also easy to get the funds out, right, if you need to?
It is. Since it's your own plan, you can go right to the bank and withdraw the funds to pay for medical expenses. And even many banks make it super easy because they even allow you just to have a debit card to be able to do this.
All right. So do I have to pay for medical expenses from this account?
No. And this is why I like HSA so much. So stay with me here. So you can actually pay for medical expenses personally and just accumulate those expenses. Then you can reimburse yourself for those same expenses in a later year. So even though they're incurred this year, you can reimburse yourself for those in a later year. Now, nothing in the law says that you need to pay for these expenses out of your HSA immediately. By doing this, what some people are doing? They're actually building up that account and getting that tax-free growth. And, all that earning is not taxable. And then they'll just reimburse themselves a number of years down the road.
So true, but the account does not earn very much interest, correct?
Right. So if you keep it in a traditional savings type account, you're going to earn very little interest. So that strategy doesn't really work. But let's say you do this, Terry. Let's say that you take your HSA and you put it in a mutual fund, and that mutual fund grows. All that growth is tax-free. And so that's when you'd want to do it that way, is if you're actually going to invest your HSA funds and not use them till later.
Jeff, great information each and every week here on Tax Insight. How do listeners connect with the team at Hawkins Ash?
I would go to our website, which is hawkinsash.cpa. Follow us on Twitter or like us on Facebook.
Jeff, thank you for your time. We'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.